morning. We will start the morning call. US stocks closed flattish yesterday, while US futures are up today morning. Asian markets are mixed with a positive bias. The US 10-year bond yield continues to rise, and it has crossed 2.8%, compared to 2.3% at the start of April, and just around 1.8% a couple of months back. So we have seen a big jump in US interest rates, and this is likely to impact the demand for certain sectors of the US economy in coming months. For example, today the data for US home builder sentiment index has come out, and which is at a 7-month low in April, mainly because of rising interest rates and also because of stretched supply chains, which have increased the housing cost, thus making them unaffordable for consumers. If the global commodity costs as well as interest rates remain at current levels, then going forward there could be a global slowdown. That's it from my side. I will hand over the call to technical team.
Yes, thank you, Jehan. He was just hovering here. It's 200-day moving average open with a gap down opening, and just we have seen a selling pressure throughout the day. But somehow Nifty managed to maintain a closing at par of 200 DMA, which comes to at around 17,170 level itself. Now, looking towards the global market, I believe we are likely to open on a flattish note, and upside we might see some sort of a pullback rally towards 17,240 to 250 levels on the higher side. And if it's cleared at level, then 17,300 levels can be seen on the higher side. Now, today will be the crucial day because we need to watch whether the Nifty maintains a positive closing about 200 DMA or not. If it fails to hold that support level, which comes to at around 17,170 level on the closing basis, then the selling pressure is likely to be intensified, which might take a Nifty towards 17,100 to 17,000 levels on the downside. Coming towards the Bank Nifty for the today intraday purpose, the first resistance is placed at 37,100 level. Any more above that level, we expect a positive momentum, which might take a Bank Nifty towards 37,200 to 300 levels on the higher level. Whereas on downside, 36,700 will be the first support level. Below that level, 36,500 levels can be seen. Coming towards the Nifty Finance for today intraday purpose, 16,970 is the first resistance level. Above that level, 17,080, 17,100 levels can be seen. Whereas on other hand, 16,750 is the first support level. Below that level, 16,640 levels can be seen. The overall view will remain cautious, but we can witness some sort of a pullback rally towards 70,240 levels. We need to keep an eye on whether the Nifty maintains a positive closing about 200 DMA or not. So as of now, we are not initiating any pre-market call. Let the market clear the trend within the first half an hour. Then accordingly, we will initiate a buy or the sell call depending upon the trend of the market. I think that's it from my end. I request derivative guys to take a call forward.
Yeah, thank you, Swati. See, on the derivative front, nothing much has changed except for the VIX that has increased. The VIX has moved up from 17 odd levels to about 20 levels. So if it goes above the 20 levels and sustains above the same, it is a bad news for the market. Open interest also increase a little, not that much. So overall, still, even though we are opening up, we might just move to 17,300, 400 levels, but then the selling pressure might remain for the next 1 or 2 days. You are likely to see 17,000 levels being retested. So the overall PCR is also around the 0.75 odd mark. The puts don't have that much open interest, while the calls continue to build a high amount of open interest amongst the strikes for Nifty. The 17,400, 500 and above strikes are seeing some huge amount of open interest built up. So that is one thing which is a negative. Also, the cost of carry is huge. So throughout this month, you have seen high cost of carry, and that has been a negative sign for the market. So if you bought yesterday, we are opening up today, and one should be booking profits and staying away from buying positions, at least on the index. From the stock specific front, some stocks did witness buying, like Chambal, NTPC, and Escorts. But overall, only the PSUs really went up. So, still in the next 1 or 2 trading sessions, you might see some amount of buying coming in PSUs like HAL, NTPC, and BEL. So one can look to buy those with strict stop losses, while we might continue to witness some selling in the banking space and the IT space. So that's about it. I'd like to ask the fundamental team to take over, please.
Life insurance data for the March month has come out. The total annualized premium equivalent APE, which we use to gauge the performance for the entire private player space, increased by 11% in the month of March. This is against around 6% growth that we saw in the months of January and February. So there is some acceleration over here. Among companies, Bajaj Allianz posted the highest growth with 37% year on year. And inline performers, if we see, they were Max Life and HDFC Life, both growing at around 10 to 11% in line with the industry. And on the underperforming side, we have SBI Life and ICICI Prudential Life, both growing at around 2 to 3% only. So in the near term, it is likely that SBI, ICICI could be under some pressure. But overall, from a long-term perspective, we are bullish on all listed life insurance players and expect the industry to grow at around 18% in coming years. Thank you.
Good morning, everyone. Yesterday, our NBI desk, that is our institution desk, came out with the report on the food services industry. They had hosted Mr. Anurag Katiyar. He's the founder of Indigo Hospitality and trustee of National Restaurant Association of India. What he was talking and what he talked during the meeting was that in the last few months, the industry has seen a smart recovery led by affordable, casual, and premium fine dining formats. During the lockdown, what we have seen that around 26% of the restaurants in India has shut down permanently. However, QSR is one of the format which has recovered faster than the other subsectors like fine dining and all. In QSR also, the overall Q4 quarter, the recovery was very good and very steep. January was little affected due to Omicron. However, December, that was in Q3, Feb and March in Q4 have seen very good demand and very strong demand. As per Mr. Katiyar, the industry is going through a restructuring phase, which will yield lot of growth and dividend to stakeholders. This is what in line what we are saying for the Sapphire Foods, which is we believe this one of the biggest beneficiary would be in this QSR format. We have seen that the industry is tending towards QSR format unlike others, and in that we believe that Sapphire gives us the most valuation comfort. So that is why we are bullish and likely to continue our positive outlook on the same. Thank you.
That's it from our side. Thank you for attending. Have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.